Good morning, everyone. So markets are on hold here in front of the FOMC announcement at 2 o'clock, but some interesting gaps going on here, pre-market anyway, that we'll take a look at. Before we get to that, just wanted to show you some of the markings that I'm sure those of you that have watched the videos for a while, you've seen these on the chart and say, well, why are they here? Well, for two reasons. First of all, as the pattern is setting up, I mark it on the chart, meaning this is what I think is going to play out here. So the pattern that sets up a reversal tail at support, that would suggest a bottom, and prices are going to go up. And M top, which suggests, and this is when it retests here before it breaks down, M top possibly here. So if I get my trigger, that's in place. New high failure, the breakout here, reversal back in, prices should go down. Retest over here, but should hold and go up. Breakout failure and topping tail should go down, third retest, and so forth. So while these are here, not only do they help to set up, what I believe is going to happen based on the initial pattern, similar to the video last week in the chart of the week on the breakout bar failure on Amazon that played out nicely. Leaving them on the chart reinforces for you to see those patterns every day if it's something that you're looking at. So it has a twofold benefit. One of the hurdles, if you will, with technical trading is seeing the pattern in the moment. You can often go back. We've all experienced this where it's either twofold, meaning you look at the patterns and you go, why didn't I see that and take advantage of it? The other side of it is, why the hell did I do that trade? Going back and looking at the setup and what was I looking at? So by practicing, in a sense, every day, the patterns that and want to use within your trading plan, this helps reinforce what you're doing. Okay, so give it a try. So yesterday was an inside day. So far today in the S&Ps here, they're trading inside the range as we wait for the FOMC. And it is possible that they do start to move ahead of time. They are basing here pre-market, which would imply that they could break out. The weekly's in an uptrend, the daily's in an uptrend, sideways here, so maybe they do. But just be aware at 2 o'clock they're going to gyrate around, and then we'll see which way they end up. NASDAQ futures showing relative weakness, actually. They're not grinding higher. They're just chopping sideways, still in an uptrend. We're waiting to see if they actually can break out for a long here since the trend is up. So we'll see. Right now, it's just a wait. Nothing happening there. However, the Dow keeps churning up to make new all-time highs. And, sometimes you have to look at that little squinted or skeptically, in a sense, is like, the news out there, new all-time highs, and maybe, getting ready to draw in the Johnny-come-latelys into the market, and everything is just so terrific, you know what I mean. Gold pulling back here, and it may actually set up as a buy in the next few days. Let's see. The FOMC announcement probably going to have an effect on that. But, they came up to the resistance area. They're pulling back to support, and we'll see if they can begin to turn around here. And oil acting quite well up here at resistance. So here's another concept, for a play. Whereas you get a deep retracement like this, right? So the deep retracement up into resistance, there's going to be sellers there, and obviously there are. It's not going up, but it's not going down either. So here's the concept, what I call absorbing supply, and it's a bullish setup where prices have a deep retracement. They come up into resistance where the sellers are. Right? Similar, not exactly the same, but similar to here. There's going to be sellers here, and prices pulled back. So when they start to pull back, let me back up here. The depth of the retracement would suggest that they're not going to pull back a lot. They shouldn't collapse, in other words, but in a bottoming pattern, they can. But when you have the deep retracement and they go sideways at that resistance area, it's suggesting or signaling that buyers aren't stepping away. Rather, they're absorbing the supply here. And when this consolidation is complete, and it's hard to say when that exactly would be, but sometimes a bottoming tail bar that closes at its high at the top of the range, that would be a signal that we'd go long above the high of that bottoming tail bar. Okay? So keep an eye on that. And where are my bonds? Here, bonds. This is of some interest to us, and that, bonds now have pulled back here, and that definitely helped financials. So as bond prices pull back, interest rates go up, and the inverse relationship there helps financials at this point in time. And that correlation doesn't always play out that way, but Citigroup was able to move above this resistance area here as bonds pulled back. JPM, relatively weak compared to Citi, but went back up to the top of the range. What we're interested in here is picking on the weak one in the group, and that one is Goldman Sachs. Now, this is a sloppy pattern, but up at this resistance area here, and we do need to see bonds begin to move higher, interest rates lower, and then we're going to consider this for maybe an iron condor or a credit spread. Whereas as long as it stays below our levels, and we haven't determined that yet, we're going to probably right after the open and watch bonds a little bit. We'll determine if there's a call credit spread that makes sense to bring in that premium and just let it pull back, chop around at the top of the range. So the difference here is, as long as it stays below our strikes, it doesn't even have to decline much. Maybe not at all, goes sideways, we get to collect the premium, the money. Whereas if you shorted it and it stayed up there, you don't make any money. So big difference, different tool, if you will, bonds versus actually shorting the underlying or buying it. Sometimes one is better than the other, and vice versa. Okay, some of these gaps. ALB is gapping up here, 136. What's interesting here, it could go higher, but, wide range bar, continued higher, up. I think it's probably closer to some type of a pullback. I wish the gap was a little bit bigger because I'm looking at this possibly as a fade, but we shall see. WDC is gapping lower here to around 86. It's just below it, as you can see on the 30-minute chart. So a bit of a shock element there where it's gapping down here. So possible short if it sets up as a gap play in the morning. GIS gapping down here around $52. So it's cleared all of the resistance. Now, it would have been even better if it was gapping down below a big green bar, but it was on the way down. But it's clearing all of this resistance. It has room to fall, right? So it's got that void that I talk about. So that's of interest. And IONS is gapping down here. It's jiggling around here. Well, actually, not jiggling. It's within a 2-point range already. But this is gapping down significantly here, around 52-ish. The moving averages don't bother me, but again, it's got room to fall. Look at the way it went up. This momentum move creates that void. So I'll be watching that. And then Goldman Sachs I already spoke about. So that's it for this morning. Markets, some of the stocks I'll be looking at. We'll see what happens with the FOMC. Keep an eye on bonds, and take a visit to mastertrader.com. Sign up for our free course. There's a free course there that you can take. Covers all the basics of the market, foundation of technical analysis. Get a trial to our advisory letter, and having a great time with subscribers to our weekly lessons. They're really enjoying that and getting a lesson every week, learning different strategies, different option strategies, different plays and such. And so that's been a great service. A lot of subscribers really enjoying that. So good trading, everyone. We'll talk tomorrow.